Hello everyone and welcome to this weekly technical analysis video here at xm.com. So this week we are going to see the Bank of Japan meeting, the Eurozone GDP data and the US Core PCE index data all on Friday. So starting from the Bank of Japan, in the event that Ueda keeps all of the monetary policy measures at their current levels in his first meeting this Friday, as is widely anticipated, investors will be looking for hints about the timing of any prospective revision. The figures may not have much of an effect on the yen, but if Ueda hints at a change later in the year, the yen is likely to rise against its peers. So looking at dollar yen now, we can see that the price is struggling to fall beneath these short-term SMAs around the 132.95 region, which is the 23.6% Fibonacci. But if there is a drop beneath it, then the market may challenge the 131.35 short-term uptrend line ahead of this restrictive region here of 129.80 and towards the 130.60. Any movement beneath these lines as well, then it may change the outlook to bearish. On the flip side now, if the market overcomes the 135.15 resistance level, then it may challenge this strong resistance area of the 38.2% Fibonacci near 136.66 and the 200-day SMA around 137.10. Any movements above this line here, then it may switch the outlook to strongly positive. Looking at the technical oscillators now, the RSI is pointing slightly up above the neutral threshold of 50, while the MACD is moving slightly higher above its trigger and zero lines. Moving forward, looking at the Eurozone GDP data, the Eurozone economy started at the close of 2018, but the first 3 months of 2023 are predicted to show modest improvement. Flash GDP numbers on Friday are expected to show 0.2% quarterly growth. As those probabilities rise, the euro may rise to break above the 1.10 round number, but currently it's moving slightly the 1.0980. And if there is more room to rise, then the market may hit the previous peak of 1.1080. Above this line here, then the market may challenge the March of 2022 peak around 1.1180. On the other hand, now when it drops beneath the 20-day SMA, then it may move towards this uptrend line here and near the 1.0830 to 1.0760 support region, which also overlaps with the 50-day SMA. Further losses should test the 200-day SMA around 1.0620, and any moves beneath this line here, then it may switch the outlook to bearish. The MACD oscillator is holding slightly beneath its trigger line in the positive region, while the RSI is also moving in above the 50 level, but is sloping slightly to the downside. Moving forward, we are going to see the US Core PCE inflation that had slowed down a lot since 2022, when it hit a high of 5.4%. However, the rate of decline has slowed in recent months. The Core PCE price index is expected to have gone down a little bit in March to 4.5% year on year. In May, the Fed will almost certainly raise rates by 25 basis points, but a larger increase is quite doubtful, so dollar may struggle to attract much upside pressure. Currently, dollar index is holding beneath the 20-day SMA as it tested several times in the preceding days, and so the next support level to have in mind is the 101.10 towards the 100.40, and any movements beneath this line, it could endorse the bearish actions. On the flip side, if there is a climb above the 20-day SMA, then it may move towards the next resistance levels, such as the 102.45 and the 103 psychological mark, which overlaps with the 50-day as well. So any movements above this region here, then it may move towards the 104.70 to 105.40. And of course, if there is an upside move above the 200-day SMA, then it may switch the bias to bullish. Looking now at the technical oscillators, the MACD is standing above its trigger line in the negative region, while the RSI is pointing slightly up below the 50 level, and if there is a cross above it, then it could endorse the bullish movement. So that's all from me. Thank you for watching and have a great day.